Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm going to go over market analysis. I'm going to look at a couple of different indexes. We'll look at the Nasdaq, the Dow, or maybe it was the S&P 500 I put through in there, Dow or S&P 500. We'll look at the 10-year treasuries. We'll look at the dollar. I think I've got the dollar in here. And we'll look at these things to see kind of what the overall market's doing. So let's jump in. This is technical analysis, kind of to see what's going on. Now, so first, I'd start off with the 10-year U.S. Treasury yield. We did break this short-term downtrend line here. We are coming on back. We'll see where this thing heads. I'm inclined for interest rates to head higher over time, not necessarily lower. So that's because of the rising inflation rate, and the rising inflation rate's coming from real estate. And I'm going to touch on some real estate stuff here. So right now, we broke out of this kind of short-term downtrend, but we are coming on back a little bit. That's going to be positive for stocks because stocks like declining interest rates. Now here's a little bit bigger picture, kind of a longer-term view. Interest rates broke out in 2016 to head higher. Then we had the COVID scare sell-off. Try to push these rates lower. I kind of almost think that it was done on purpose, but whatever. Then we've got this kind of pattern, and usually on the way up, it mimics the way it came down. So we've got this like little wing or whatever we want to call this. This is coming down here, and I'm looking for this to come back up. That's what I'm waiting for. That's kind of what I expect. And I want to see if we come back above this downtrend line. Now, we've got a little bit lower 10-year yields, and this is going to be a tailwind in the short term for stocks like the Dow. Dow did break to the upside of this pattern here, and we've been kind of just chugging higher to sideways to higher. The Nasdaq Composite also broke to the upside here. I was looking for a downside break with increasing yields, but the yields went lower, which means that we can still expand the PE multiple. Growth stocks like lower interest rates, so we're going on up. Usually when you see this, you're going to see a stable dollar. The dollar has been going up in this uptrend here. We broke this trend line going up this way, so it broke that to the downside. But if you draw it from 08 and use these bottoms here, which is a couple of hits here, you could say that this trend line's holding. I'm expecting this to go down because we're seeing inflation. It's out there. And inflation manifests itself in a lower dollar. They're printing like heck, and I think they're going to need inflation, and they're going to inflate away some of the debts that they have. They being the states and government, Federal Reserve, is going to print more money to pay the debt off that the Federal Reserve or federal government is accruing. So here's the dollar to Swiss franc ratio. The last commodity bull market was from 2000 to 2008. We've had a declining dollar in relationship to the Swiss franc. We also have a declining dollar in relationship to the Swiss franc here just recently. We also had a very good valuation for commodities to stocks here, and commodities became overvalued in relationship to stocks at the bottom here. This is where gold peaked in this red arrow here when this ratio peaked to the downside. So this was the peak for gold. We are now heading lower, which I think we've got the same valuation signals in commodities versus stocks to buy commodities, and we're getting this same decline in the dollar to Swiss franc ratio. So I think the market conditions are there. Every time we have a boom in commodities, it's been in an expansion phase of real estate. 1.5 is the average, and we're going into an expansion phase of real estate right now. And we've got the valuations of commodities being cheap. Everything in history, when it's aligned like this, has been a commodities boom. So that's also why I'm an extreme bull in commodities and why I think the dollar is going to decline. Now, here is the gold to monetary base ratio. We've got this declining wedge pattern, and we broke to the upside just recently. I think this is going to continue higher given where we are in housing starts and real estate. given where the commodities valuation is in comparison to stocks. And we broke this technical chart pattern where we've had the buyers starting to equal the sellers right into this corner, and we just broke to the upside. I think it's just a matter of time before this heads substantially higher. And what this means is that gold is going to make gains against, or basically account for all the money that's been printed. The 70s bull market was this big move here, and it accounted for the money supply. And then the last one was from 2000 to 2008. And now we're going into a gigantic bull market, I think, coming up in commodities. Here's some news that I was looking at. I just captured this. Metals, copper eases on China decision to sell reserves. That was in June 15th. And China offers oil reserves an unprecedented move to cool oil rally July 21st. Just to show you that they are trying to control and throw some extra product onto the market or commodities of these commodities. For real estate, and this is the driver of inflation, M2 money supply, we have a fractional reserve lending system. 98% of the money of all currencies created through loans in the commercial banking system. 60% of those loans come from residential real estate. The active listing count here, which is basically inventory to purchase, is declined over time. And whenever this declines, you're going to see home prices go up in price. So we're eating away our inventories, and you can see it year over year right here. Here's newly listed homes. Newly listed homes, this needs to go far higher for this to basically thwart the move in house prices going higher. We have not been producing, or newly listed homes coming on hasn't been that great. So I see this continuing to move to the upside for real estate. Days on the market, whenever your inventory becomes super tight, you're going to see your days on the market start to fall. We're seeing days on the market fall over time. And in 2021, we were at incredibly low levels between 35 and 40. Incredibly low. Medium listing price, it has continued to move higher over time. Sure, this is probably going to follow, it's going to come back a little bit based off of the seasonal changes in prices. And as you can see, you kind of go up and over. So I expect this to kind of go up and over a little bit for the last half of this year. So everything is intact for a commodity bull market. If gold starts to account for the monetary base, which we broke out of that big pattern, that's a huge break. I see a huge move in commodities happening. I see a weakness in dollar that's out in front of us. Now, in the very short term, we could see stocks continue to go higher. We could see the dollar continuing to go sideways or maybe even strengthen. That's going to be positive for stocks in the short term. In the long term, I think all of this is going to rotate, and we're going to see commodities outperform stocks because the valuations are telling us that commodities are incredibly undervalued. And it's also the market conditions based in real estate, which is the driver of inflation, which is the driver of higher interest rates. And higher interest rates causes the rotation of money to move out of bonds and stocks and into hard assets. If you guys like this content, please give me a thumbs up. Thank you for listening. This is Finding Value.